Alright, guys, we up and running, eh? I'll bring in your papers for you all now. I have no idea who else coming, so I didn't print too many more papers. Alright, cool. Unstoppable Brit evening. Scully Rare Boy. What's going on? That large name. I like that one. Oh, 1 second, guys. Then open the chat in a separate box. Right, there you go. Yeah, actually, yeah. Alright, sure you see it, you know later. Oh yeah, I'll bring it. Alright. Hey, how are you doing? No, I'm not. Kayan, afternoon, how you doing? Okay, evening. Good afternoon, sir. And yeah, for vibes. I'm just having some more kids in the Google Meet there. Oh. I was supposed to offer this person. Alright. Afternoon, Devin. Afternoon, Mandeep. Afternoon, Talia. Hope you're all doing well. We'll start shortly. Yeah, good to have you on.
Can't take that. No, that's money.
There's Jordan. Alright. Hey, afternoon, Jordan. How you doing? Good to have you on. Right.
Afternoon too. I'm good.
Alright. Good to see you. Let me just let in Jaden there. Jaden, afternoon. How are you? Good to have you on. Alright. I just need to staple a couple of pages here and then we'll well, sorry. I was on the other ones that I sent you. The other one. Which other one is that, Gil? Ciara. What's Ciara? Amani or Amani. Amani. I like your attitude. 60 tomorrow. Yeah, there we go. Unstoppable Brit. There we go. Sharisha. May 2024. Lover of old school. Hell City 5 afternoon. When you say old school, like old school music, like dancehall and then R&B, hip hop. When you say old school, what do you mean? Or like just general old school things. Hey, look, Gleneva boy. Afternoon. Gleneva, we're doing May 2024, Jan 2024, and Jan 2025. 2023. That's 2024. Alright, so let me just yeah. You know what it is? You know what you're watching? Just on. Alright. Alright, folks. Yes, sir, every genre. Alright, look. Old school video games too, or what? Alright, so I just take my rule from my class and then we'll start talking, right? Every time. Alright, so and this is here. I see Ayaz, I see Devin, I see Jada, I see Jaziri, Jordan, right? Cassie, Kelsey, Mandeep, right? So yeah. 1, 2, 1, 2. Alright, cool. Oh. Alright, yeah, well, I printed a couple extra copies there, so whenever they reach, you just have to kind of pick up and run over here. Folks, good afternoon. The exam is tomorrow. Hoping to get through 3 papers this afternoon, the 3 most recent, starting with May 2024. Then we'll hit Jan 2024 and then Jan 2025. Right, someone was nice enough to, I don't want to say donate, but yeah, give us the Jan 2025 paper. My source didn't have it, and the person in the chat had it. So I was like, yeah, anyhow. So we get through that. And here's Ayaz. All right, so folks, good afternoon. Ayaz, good afternoon. How you doing, man? All right, so again, what we, just like we've been doing Friday and Saturday, we just kind of running through the paper. Last day on earth. Nah, behave yourself for that. Do you find that they repeat the January and May, June paper 1 questions? The questions repeat, yeah. I've done basically every paper from 2002 come forward. And yeah, the questions repeat a lot. Also, let's say they have maybe 75 questions in total, and they swap out some every year, and they kind of cycle it, right? Every now and again, they'll change a figure, they'll change a name, but the underlying underlying concept is the same. Right, folks. So this is the exam from last year. All right. So we'll continue in the same pattern as we did the past couple of days. We'll do what's visible and then scroll on to do what's well, not presently visible. All right. So anything theory-wise, we'll just kind of talk through. Anything that needs calculations, I will calculate. All right. So a trader had an opening capital of 3,900. If his drawings were 900 and his closing capital was 4860, what was his net profit? We've seen this one a couple of times before, right? Right. So your opening capital is 3,900. Your drawings. Now, what does drawings do to capital? Decrease it. So we're going to subtract that drawings out from the 3,900. 3,900 minus 900 is 3,000. Right? And then they tell you that your closing capital was 4860, which means they had to have some kind of increase from here to here. Right? And that increase is the net profit, right? Why do people get into a business? To make a profit. And profit does what to capital? Increase it. So if you do your simple arithmetic and say 4860 minus 3,000, we get 1,860 as option C. Right, dapper done, very good. Right, I see here, I did the dance boy. Right, here we go, what vibes, nice. Next, number 2, the main internal users of accounting information are A, managers. Cool. 3, loans, creditors, and accrued expenses are all examples of anybody. Liabilities, that's correct. All right, number 5, for which of the following purposes are partnerships formed? Yeah, Gleneva, senior, good job. Right, combining capital from different persons, yes. Benefiting from different skills and specializations, yes. Sharing ideas, experience, and responsibilities, yes. So, 1, 2, and 3, which is option D. All right, good job. All right, scrolling down. Right, number 4, bottom left-hand side. In which of the following financial statements would directors' remuneration be found? A director is someone in charge of a limited liability company. Remuneration is their pay, which is an expense, and all expenses are found in the income statement. Or as they have here, profit and loss account. I don't know why they still use that term, but cool, right? So if you see profit and loss account, they mean income statement. All right, next one, number 6 on the right-hand side there, the total value of capital. Right, so what is our basic formula, our day 1 formula for capital? Capital is equal to assets minus liabilities. So let's go through that list and see which items are assets and which items are liabilities. Machinery, asset. Furniture, debtors, asset. That's receivables, right? If you see debtors, that's accounts receivable, which is an asset. Bank overdraft, that's a liability. Inventory, asset. Cash is asset. And creditor, that's liability. Okay, so let's add up all the assets. 20 and 5 is 25, and 3 is 28. 28 and 15 is 43. So your total assets is 43,000. Now, of course, please feel free to use your calculators, which you can use in the exam. Afternoon stage, how are you doing? Right? 3 and 4 for the liabilities is 7. Right, so you add those together, you get 7. 43 minus 7 is 36,000. As option A. Okay, so that's it for page 1 in the May 2024 paper 1. All right. In class, people, have you any questions on any of the items that we did so far? No? All right. So, my Google Meet crew, Ayaz, Devin, Jaden, Jordan, Cassie, Mandy, Pantali. If you guys are good with that, just kindly give me a quick G in the chat. Or Jaden, I know senior comment, they're coming in person. Cool, no problem. I'll have hard copies ready for you. Right, and of course, if you need me to re-explain any, many, or everything, give me an R, but give me the number. All right. Oh, well, that's everybody. All right, cool. Let me go ahead. Okay. So top left-hand side, which feature of a partnership implies that each partner can be called upon to liquidate personal property in order to pay the business's debts? Anybody remember that one? Mutual agency is where they each sort of represent the interest of the partnership. So they each act on behalf of the partnership. It's actually B, unlimited liability. So that's the risk behind starting a business, right? If your business can't pay back all its liabilities, you have to now pay back from your personal assets. So that's where limited liability entities come into play. So that way you could safeguard your assets and have only your investment be used to pay back. All right. Okay, number 8 now. So any paper 3s for Shanice, I did the paper 3s and I passed this, but there's a cost attached to it. If you're interested, you could email me. Right, we could talk about that. Right. So in a limited liability company, which of the following groups of persons is paid first after net profit is determined? Now, I think this is a relatively new question. I don't see this one very often, right? So after net profit in a limited company, we have the appropriation account, right? In your appropriation account, you have 2 sets of transfers. You have transfers to reserves and you have dividends. Dividends, you could have 2 types, preference and ordinary, right? Right. So which of those 2 categories do you think gets paid first? Preference or ordinary? Preference, because that's what they are preferred for, preferred in terms of dividend. All right. So preference shareholders is the answer there. All right. Can we scroll? Okay, we'll do 11 and 12 and scroll on to do 9 and 10. Okay. Okay. So P Hawk has a manufacturing business. Cost of raw materials 1900. Rent and rates is 2,000. Factory rates and rent total that 2,000. The number of units produces that. Okay, they actually had a question on this in the paper we did Saturday, and I want you to just notice something here. I'm going to highlight it, right? You see, they have rates and rent total this, and then factory rates and rent total that. So when you're talking about the manufacturing aspect of the business, we're only talking about the production of factory costs, right? Now, raw materials, that's automatically a factor or a manufacturing cost, all right? So that cost, so the raw materials used is 1,900, right? The rates and rent is 2,000 and factory returns to, okay, so the factory rent and rates or rates and rent is 2,000, right? The previous one seems like a bit of a repeat. It seems redundant. So we have 3,900. What is the cost of 1 unit? So if all the units, so you made 640 units. If they all cost 3,900 in total to make, how do we find the cost of 1 unit? You take total cost and then you divide by the 640, right? So we're just watching 2018. Okay, cool. Oops, sorry. All right, so let's see. So this was interesting that they brought it this way. So that's why some people weren't happy. It didn't come the exact same way. So 6.09 can round out to 6, right? Especially if they didn't give you any options for like 6.1 or anything like that, right? Okay. All right. Number 12. Hold on, let me see. Okay. Right. This is May 2024. Right. S&S Enterprises bought a motor vehicle valued at $250,000 to deliver goods. 3 years after the purchase, the motor vehicle was still being recorded at the original value. Which of the following concepts was not applied? Okay, so I guess what they wanted to infer here is so how do we classify a motor vehicle? It's an asset. And if you had to choose between current and non-current, which one would it be? Non-current. And a non-current assets like motor vehicles, equipment, machinery, recharge, depreciation. So what the implication is here I believe, is that they have not charged depreciation, right? Now, the thing is, there is a concept called the historical cost concept, which says that a non-current asset must be recorded and shown in your balance sheet at its historical cost. Basically, whatever you buy it for, it still needs to have that value in the account, unless you buy more or sell something, right? So the way they ask this question to me is a little weird because it's supposed to be recorded at its original value. However, it is supposed to be depreciated. One second. Thank you very much. So it is supposed to be recorded at its written down value or its depreciated value, right? The original historical cost is supposed to be visible, right? Let me set in Marcus. Hey Marcus, good afternoon. How you doing? We're working in May 2024. We know on question 12, so you didn't miss too much. Most of the stuff we did so far you saw already. A couple of new ones, including this one. It's asking that if we bought a motor vehicle for $250,000, and it was basically this thing, it wasn't depreciated. So long story short here, prudence, all right? So the prudence concept, part of it says that you're supposed to record your assets at a fair value, right? You're not supposed to overstate the value of your assets. So if you don't record depreciation, you would actually be overstating the value of the motor vehicle, right? Because it would have lost value over time. All right, so let's see if we could knock out 9, 10, and 13. Which of the following are profitability ratios? Net margin, gross margin, and the current ratio. Right, so the current ratio is a liquidity ratio, right? It tells us how easily we can pay off our current liabilities using our current assets. So anything with item 3 is out, and B, C, and D all have item 3. The only two profitability margins in this list is 1 and 2, which is option A. Very good N, right, on the TikTok. YouTube, isn't A debenture holder? Hold on, which one are you talking about there? Shiba. Number. Right. Which of the following items are examples of current liabilities? Well, mortgages are non-current for sure. Mortgages are for like 25, 40, 50 years kind of thing, right? So 1 is out. So any option with option 1 is out, and that's A, B, and D. Accounts payable, accrued wages, definitely current. So the only option viable here is option C. Right. Number 8. Right, but they said after net profit is determined, the debenture holders, right, are paid interest, and the interest is an expense deductible in the income statement, right? So that's why they said, which of the following groups of persons paid first after net profit is determined, and you would have paid off your interest in the determination of net profit. So thereafter, you would have to pay your preference shareholders. But I understand where you're coming from. All right. Number 10 is C. Very good. Yeah. All right. Which of the following is true of a credit entry? It decreases a bank loan. Now, a loan is a liability, and tell them page. Liabilities increase with credits. So a credit entry would not decrease a loan. Would increase cash at bank. Cash at bank is an asset, and assets increase with debits. So a credit would not increase that. All right. It also, C is also out because C is also an asset and it wouldn't increase. Ashiba, we said no. 1 second. Hold on. Let me see if I can talk to Ashiba real quick. Ashiba, it said, which group of persons is paid first after net profit is determined? We pay debenture holders interest. And interest is an expense which is deducted in the determination of net profit. So net profit is determined by deducting debenture interest. And thereafter, you pay your dividends and your transfer, right? Okay, cool. There you go. Right. Sorry. And also your comment there. There's a bit of a delay. Anybody on YouTube, there's a bit of a delay, like a time delay, like it's like 7 to 14 seconds between when I do something and then when you see it. Can I re-explain 11 just now? Right. Which are the first? Okay, so this one here is obviously D, right? Decrease accounts receivable, right? And number 11. Yeah, so number 11 was just, I had to add the 1900 and the 2000. The first 2000 was like a regular rent, and it was not factory, right? Because it's a manufacturing business and you're trying to calculate cost of manufacture, cost of production, you're only taking into consideration manufacturing costs. right? So that first rent and rates and rent total 2,000. That was not relevant to your calculation. Okay. All right. Google Meet. If you guys are good with the answers on this page, just kind of give me a quick G in the chat. OJ done, no vibes. All right. In class, people, same thing with you. Are you guys good with this? All right. Any questions? Anybody, anything? All right. Okay. Anything else? All right, next page, 14, 15, and 16. So all three items are taken from this. Okay, Ashiba. Right, cool. And I'll see in your right. Okay, cash book. So we have an opening cash balance on this side here, which is a debit balance, but the bank balance is brought on the credit side. That implies it's a liability, and more specifically, an overdraft. Yeah, sure, you see. It will be saved. Right, okay. So the opening bank balance indicates that the firm has a $2,500. Which option there? B, as an overdraft. Right. Which of the following best describes the entries on the 8th of May? Let's see. The 8th of May. We have that item there. This item here. So you have a credit under the cash column, which means money is coming out of cash, and the details say bank. So that's where it's going. And on the debit side under bank, you're seeing the same 100, and the details say coming from cash. That's a contra entry. Ashiba, 2024 May. That's correct. And what is the closing cash balance? Oh, so we had so we have a little addition to do, boy. All right, cool. Let's check it out then. Right. So cash is an asset. Your debit side of the account records the increases, right? So inflows or increases. And of course, your credit side records the outflow or the decreases. So if we add up these two items here, we'll get the 1750, right? So we have 1750 coming in. And if you add up the two outflows, 100 plus 50 is just 150, right? So if you take 1750 and minus 150, what do we get? 1,600. So that's option E. No, sorry, B. My bad. Okay. Here we go. Correct. All right. Okay. In class, people, are we okay with these three questions based on the cash book? Any questions, problems, issues? No? All right. Google Meet. If you guys are good with that, give me a quick G. Right? If you need me to re-explain, give me an R and give me the number. Scan them. Are they get nobody at the Nikon tomorrow? The Nikon? Oh, okay. Like you're ready with it. What a bank lodgement is? Okay. So you know what have ATMs, right? So if I get a check from a client and I go and I put in the ATM, what happens is that there is like a 5 business day, like a whole week I had to wait till it show up in my account on my bank, on like online banking, right? Now in my cash book, when I get a check, I would say, okay, debit in the cash book. Hey, I received money. So my cash book would have an increase. My bank statement would reflect. So that money that is stuck at the bank, that's the bank. Any tips for people doing econ? Practice proper exam technique. I know. I mean, SKN, yeah. Wait, hold on. Kiara, we mean do it on laptops tomorrow? Do what? The econ or the PoA multiple choice? I didn't know you're doing e-testing. But yeah, Jazir, you told me you did e-testing in January. Well, okay. So what is do then? Like if you have to do working, just give you a scrap paper to work on, or Like any multiple choice, like how we have working to do, what you get paper to work on, or? So
I was e-tested.
okay, right.
We had to go in travel and do
I think they will give us what I just asked one of my students who did exam. What was that? Calculate. Okay, yeah, yeah. You were singing my name for helping the people too. Yeah. I wish we could have like what do you call it? Sorry, my brain, my words. Okay, guys. I always laugh when I read this question. A motor vehicle was credited from AG Motors for use in the business. How should this be recorded? Prior to the first time, sorry, like last year when I saw that for the first time, like, what do you mean a motor vehicle is credited? What they mean, a motor vehicle was bought on credit from AG Motors. That's what it means. I had to figure it out. I don't know. You all ever saw that phrase in school? Anybody? That for number 7, a motor vehicle was credited. Right. So, yeah. Let me see your cards on the page. Well, tell them stop here. Or tell them you don't know. Act stupid. It's your people. Fire burn them. Right. Okay. Right. So you're buying an asset. When you buy an asset, does it increase or decrease? Increase. How do we record increases in assets? Debit. So you'll debit motor vehicle. So that's either option A or option D. Now, option A has credit bank, but we only credit bank if we pay for it. Did we pay for it or buy it on credit? Buy it on credit. So option A is out. So the only viable option is option D, which is correct because if you buy it on credit from AG Motors, you now owe AG Motors money. Anytime you owe anybody money for anything that's classified as a liability, which would increase with a credit. Okay. Item 18 refers to the following information. A calculation to determine gross profit percentage is as follows. All right. Yeah, Luke boy, what vibes? Like that first name. Right. Wait, Zian, does you? Chris, why not debit purchase? Okay, I see, because purchases is only for purchase of stock, right? So the only asset that goes in the purchases account is stock. Hey, hola. Yeah, sorry. So, okay, what does the 529,800 represent? That's, well, it should say net sales, but since we don't have that, the only thing that makes sense is total sales. All right. Oh, hi, peace sign. How you doing? Cool. All right. The credit balance brought forward on P. John's revenue account is $25. This means that for the year, 25 rent revenue is, okay, sorry? Oh, yeah. So this one is actually a very interesting one. So a revenue account is not supposed to have a balance brought forward at the end of the year, or the start of the year, sorry, right? And if it's brought forward on the credit side, right? Now we know revenues, Sean, this is May 2024. We know revenues have credit balances, but again, usually that's closed off to the income statement. So if you have a balance brought forward in credit side, it's either an asset or a liability. Now, assets have debit balances, which means liabilities have credit balances. How can a revenue have a liability aspect? If it is prepaid. When someone prepays a revenue, it means they pay you before you have delivered your good or your service. All right. Ashiba, no. That was if it's gross as if it's cost as markup. If it's markup, gross profit percentage is basically gross margin, where your sales is your denominator. Right. Sorry. Back to 19. Right. So if you have a credit balance on a revenue account, after you've closed it off or whatever the case is, it means that it's a liability. And it can only be a liability if it's prepaid, right? So a prepaid revenue is where somebody pays you before you deliver your good or your service. What that means is you now have an obligation to deliver your good or service to them or give them a refund. Either way, you owe them something. And anytime you owe anybody anything, we classify that as a liability. So a credit balance on a revenue account means it's a prepaid revenue. Or too difficult. Sorry. Okay. All right. Which of the following items can be used to adjust the cash book balance before a bank reconciliation statement is written? Okay, cool. So we have a few items. We have direct debits, direct credits, standing orders, bank charges, dishonored checks, and a few others. Direct transfers and bank, no. Direct transfers and dishonored, right, so B. Oh, sorry. Cool. Bank lodgements and unpresented checks are for the bank rec. Dishonored checks and unpresented checks are one for each. Right. Shania Smith. Okay, I have a Shania Smith and a Shania Simmons. So I'll do it. Right. Okay. Gabby, we're going on Gabby on TikTok. You good? Right. The debit side of a trial balance exceeds the credit side by 1,200. A suspense account should therefore be opened with a difference of 1,200 on the. So if the debit side bigger than the credit side, which side needs a little extra to make it balance? The credit side. So B, 1,200 on the credit side. Cool. Beautifully made, no problem. All right. Okay, so folks on Google, so Ayaz, Devin, Jordan, Cassie, Mandeep, Marcus, and Talia. If you guys are good with the solutions on this page, 17 to 21, let's give me a quick Genie chat, please. Right? If you need me to re-explain any, many, or everything, yo. Which one, 20? Right. So which of the following items can be used to adjust the cash book before the bank rec? Okay. So direct transfers are like when your parents pay me with an online banking. So I wouldn't know about it until I go online. So my cash book wouldn't have it, my bank statement would, right? So a direct transfer is definitely one where you have to update the cash book. No, right. So a bank lodgement is where we deposit a check or cash, but it hasn't yet showed up on the bank statement because there's a time delay between when we put it in and when it processes and ultimately shows up. So the bank lodgement would actually be an adjustment on the bank rec, not the updated cash book. Right? Nayeli, yes, I am live. Both of them, right? Nicholas, so suspense is the provisions account? I didn't understand that question. So the suspense account is simply an account used to balance the trial balance or make it balance when it doesn't agree. Right? The provision for bad debts, provision are not the suspense account, different things. Okay, all right, ready for your next page? Let's go. All right, sorry, just give me 1 sec. I just want to print one more copy in case somebody shows up. I don't think anybody will. Okay, so let's zoom in. Right. So, Miss Smith, I hope this is close enough. Okay, number 22. Money spent by a company on the purchase or improvement of a non-current asset is referred to as capital expenditure. Right, so they kind of ask that in reverse this time because normally they give us the type of expenditure and ask us, well, what is it? Capital revenue. All right. Item 23. Oh, ratios. What is the rate of inventory turnover? Anybody remember your formula? Rate of inventory turnover is cost of goods sold divided by average stock. Right. Hey, Chocho vibes. So cost of goods sold or cost of sales is 20. They give it us, right? You have two stocks, opening and closing. How do you find the average of two numbers? Add them and divide by them, right? So 30 plus 7 divided by 2 is 18,500. So the calculation here is 20,000 divided by 18,500. Right? Yeah. I am? Yeah. Yeah. I am guessing that A is the answer here. Let's take a look. All right, so 20 divided by 18,500. Yeah, 1.081. There you go. So what that means is that the company sells out its average stock a little more than 1 time per year. Okay, item 25 now. So again, we'll go with whatever's visible and then scroll down and do whatever's left, right? So it's not going to be in the exact order that it's supposed to be, but it's close enough. Item 25 refers to the following information taken from the manufacturing account of SIDS Company Limited. We have prime cost, factory overhead, and direct wages. Now, direct wages is part of prime cost. So your prime cost is your direct materials plus your direct labor or factory wages and any other direct costs. So the cost of materials used. This is new. Right. So they give you prime cost. So prime cost is direct materials plus direct labor. Right? So direct materials plus direct labor is equal to prime cost. If you want to solve for direct materials, you'll carry over direct labor by subtracting it from both sides. Right? So direct labor being the factory wages. So prime cost minus your direct labor. So that's equal to the 89,850 minus the 66,000. So that's 23,850. Yeah, so that's option A. All right. 26. Which of the following would be treated as a prime cost in the manufacturing account? Now, we just saw that direct wages. So that was a bit of a giveaway question there. Right? Assuming you know what it is. All right, scrolling down. What's that question? Calculators are allowed. Yeah, it's math paper 1. You can't use a calculator, which is kind of foolish, but whatever. Okay. 27. We'll do 27 and then back up on 24, right? Payments made to committee members in a cooperative is known as an honorarium. Right? So that's a little bit of theory you had to kind of know there. Is that rain? All right. Now 24. So what amount will appear as purchases in the trading account? So you have creditors, right? So you could do like a creditors control account. Right, so creditors are January 1. So a creditor is a liability, and liabilities have credit balances. Chocho, we'll only know when we see the question. We won't know before. Another teacher this year said how what it was, the maths paper were the hardest paper because people who write making it new people, and they have one mission: make sure the past papers do help you, and the paper wasn't that bad. So the teacher could say what she wants or what he wants, unless they said the paper, don't buy that. Right? In any case, even if they're making new questions, what you had to do, you have no choice but to prepare. And going through the past papers and learning how to do the questions is a valid way to prepare. All right? I mean, if you're doing the same questions over and over, there's not much help. So you had to look to your notes. Right, sorry, Zian. Yeah, let me see. So the creditor at 1 January, right? So the opening balance will be on the credit side, because creditors is a liability, and liabilities have credit balances at start. Your creditor at 31st December, right? So that'll be carried down from the debit side. All right, cash purchase. If it's cash purchases, it doesn't go here. Cash paid to suppliers will go here, right? So cash paid is 5,008. Now, when you balance off this particular account, what you're going to get is your credit purchases, which is only piece of the answer. Right? So your credit purchases is the balancing figure. So we need 2,900 here. Right? Now, what did the question ask you? What amount will appear as purchases? Right? You have two types of purchases. You have cash and you have credit. They gave us cash purchases here. So that's 5,800. And your credit purchases. Wait, sorry, I pulled the wrong figure. Sorry. This is 15,000. My bad. Sorry. And you may say maths was easy. Well, I'm glad to hear that. Yeah, some people found it was easy. Some people come out of the exam crying. I hear that for PoA and Art Maths. I hear it was rough. Yeah, sorry guys, I made a mistake there. So let my mistake be a lesson for you. Make sure and read your question carefully. All right. Right. So this should be 12,100. Right. So when we add these two, we're gonna get 17,009. Right. Where was the word she said? Or he? I don't know. Sorry. Right. Israel, the paper trees. I have 10 years worth of them. Well, 10 papers done already. But there's a fee attached to that. So unfortunately, if you want that, you can pay for it. We either DM me or email me. Right. Okay. So that was this page. Okay. Google Meet. Just give me a quick G in your chat if you're good with that page, please and thanks. If you need me to rework anything, everything, or many things, give me a R and give me the number or numbers. Right. $24. All right. 24. Okay. No problems. Right. Okay. All right. Talia. Right. So the creditor's opening balance, right, will go on the credit side of the account, right? Because creditors is a liability, and liabilities have credit balances, right? So the following goes there. The closing balance is also going to be brought down on the credit side, but before you can be brought down on the credit side, you have to be carried on from the debit side. Right. So your 4,900 goes here, opening balance there, closing balance on the opposite side, right? The cash paid to suppliers is 15,000. So that's how much you're paying them off. And that goes on the debit side because it's going to reduce the liability. When you put in those three figures, the missing figure is the credit purchases, right? Because the relationship you have with your creditors came about because of credit purchases, right? So that's a major figure that should be present in the account, right? And then they ask you, what is the amount of the pay as purchases? You have two types of purchases. You have cash and you have credit. The question gave you the cash purchase here, and we had to calculate credit purchases. So after you calculate 12,001, you add it to your 5,008, and we get 17,900. Right? So I hope that helps. Right? 15,000 plus the. All right, Jules, yeah. Do I have paper ones for IT? I don't, but my friend Dwayne might have because he's the IT guy. So I'll have to ask him. All right, guys. In class, are we okay with this page? Any questions? Anybody? Anything? All right, we almost to the halfway point here. A petty cash book, boy. So items 28 to 30 refer. All right, let's take a look here. All right, so we have the petty cash book. So we have a balance at start of $15, and then they reimburse us 85, right? So 1585, right? That's the float there, and that's 100. And that's the first question they ask: what is the total value of the float? The float or the impressed amount is the value at start, after the reimbursement, if any is necessary. All right. So they started with 15 as the balance brought forward, and then the cash figure is the reimbursement. So the sum of those two is 100. That's your float. All right. Right. Very good. Petrol, taxi fare, stamps, mechanics fee, taxi fare. All right. And the 85 in cash, which was received on 1st of August, represents the B, the restoration of the impress, restoration, the reimbursement, anything along those lines. Restoration of the impressed. Right? The impressed amount, that is the amount you're supposed to start off with. Right? Which year? May 2024. On March Energy. Right. And 30, by how much should the petty cashier be reimbursed at the end of August? Okay. We're pretty sure it's not $1. How much should it be reimbursed? Okay, let's take a look. So if we add up the receipts, you get 100 here, right? 10 and 20 is 30. 30 and 14 is 44. 44 and 25 is 69. Plus 30 is... Yep. 15 plus 85 is 100. All right. Well, no, we spend 99, so we have one left. So the reimbursement will carry us back to 100. So how much ever you spend is what you get reimbursed, right? If they ask you what the balance was, then yeah, it would be $1. So yeah, the petty cashier should be reimbursed the amount that was spent, and that amount was $99. Yeah, Christiane, it was actually 99. You had $1 left. All right. The answer was 6, boy. Oh. All right. Google Meet. Give me an R. If you're good, you can hold the G. You can put if you want. Is the R. If you have any R's, just give me the number. Yeah, Shoshana, stay hydrated. This weekend I forget. yeah, I want to do that. okay. Anyhow. All right, so we're about halfway through the paper. What time is it? About 1:15? So that's about what? 35 minutes? That's not bad. That's almost a minute a question, right? Your max is 90 seconds a question, eh? Okay, ready to go? Let's go. Okay, a public limited company issued a prospectus offering the shares described. Okay, we've seen this question before. All right, so type of share, ordinary. Number of shares or number of units is 200,000. Ashiba, very good, yeah. Par value, so the number of shares multiplied by the par value will give us the total value, dollar value of the shares being issued. 10,000 by 5 for the preference will give us 50,000. The issue was fully subscribed. That means all the shares that were issued were bought. Oops. All right, let's try a simpler shape. Right. How much capital did the company raise? That's 450. Okay. Hey, Aaron, Sunny Beer. After, how you doing? Accounts 2024. Yeah. Kenya, no, PoA. You're looking like maths, eh? Right. Item 33 refers to the following, information regarding the salary of different categories of workers. Machine operator, supervisor, maintenance worker, accountant. The direct labor cost. So direct labor is paid to workers who work directly on the production. The accountant does not. The maintenance worker does not. The supervisor does not. That person supervises, does paperwork, helps out, advises, resolves disputes, but that person does not work on the production line. The machine operator is the person literally operating the machines that are making the products. So the only item here that will be included in direct labor cost is that item there, right? Hey, Melanie, good afternoon. That's a pretty interesting sticker, right? So A. Right, and 32. The owner of a business does not keep proper accounting records, but she knows her capital was 40,000 on the 1st of January and 85,000 on the 31st of December. And she withdrew $1,000. All right, check it. If she started with 40, right, as start, and she ended with 85, ignore the drawings for now. How do we get capital to increase? Either you put in more capital or you earn a profit, right? So to find the profit, you'd simply find the difference, right? So if we ignore the drawings, it'd be 45, right? Now, if we have drawings, right, what effect does drawings have on capital? Increase or decrease? Decrease. So you'll take out the drawings. So now we had to go from 39 to 85. Sorry, I just scoot that down a little bit. All right, so the net profit figure, to go from 39 to 85, you could just simply find the difference. Is 46. The net profit is 46. Okay. All right, in class, people, are we okay with this page? 31, 32, and 33? Yeah, everybody okay with it? Any questions, anything? Sure, all right. Google Meet, just give me a quick G, please and thanks. Right? If of course you need me to re-explain, give me a R. Okay, coming in fast and furious, lovely. There we go. Oh, sorry. All right, sorry guys, just give me 1 sec. Sorry, I need to open something real quick. Open Jan 2024. Where did I put Jan? Oh, I didn't open Jan 2024. Sorry. Give me 1 sec. I want to put some stuff to print before we get there. Yeah, I'm gonna put some papers to print for those in class because when we finish this one, I want to start the next one like soon. All right, so Jan 2024 is next. Okay, cool. So 1, 2, 3, 4, 5, 6. Okay. Sorry. Will this be on you? It already is technically. ATG, what vibes? Question? Yeah, it's on YouTube already. All right, let's get back to the paper. Okay. Oh, good. They didn't bring this for a couple of years, boy. Yeah, this is an old question. All right. I'm not really. So how much more are you doing after this one? This is May 2024. We're hitting Jan 2024 after, and then Jan 2025. So 2 more after this, if time permits. Right. So I'm not a fan of this question, but we'll do it. Right. So the appropriation account in T account format. Right. Suri, any econ? Sorry. But here what to do, Suri? DM and I'll give him an uncle number. He's an econ man. Like he really good, right? Melanie saying C. All right, let's take a look and see if Melanie's correct. So the balance brought forward, that's the retained earnings, and that's the current year's net profit. Right? Taxation on the debit side, we have the transfers out. Taxation reserve, preliminary expenses. Now that's something that I learned about way back in the day, but I don't think that that's still on the syllabus. Transfer to reserve, preferential dividend, ordinary dividend. Okay, cool. If you add up everything here, 10 and that's 20, 21, so 21.5, right? So your total here is 21,500. And total here is 27. Right? So you still had 5,500 left as your balance, right? Okay, what conclusion or conclusions could be drawn from the appropriation account above? The company is engaged in profitable enterprise. You're making a net profit of 26,000, so I think that could be said. Company is not doing too well. Well, not doing too well compared to what? More dividends can be given to ordinary shareholders. Yeah, you could have paid out more money, but they should hold back some for reinvestment. So yeah, 34 is C. Okay. All right, wages are usually paid weekly. Right, wages either weekly or fortnightly, which means every 2 weeks. All right. Monthly is salary, and I don't know what is paid annually or annually and yearly mean the same thing. So you could have probably eliminated options A and D because they are redundant. All right. 36. On June 1st, P Shark, a sole proprietor, owed creditors 4,300. During the month, he paid 13,000 by check. At the end of the month, his balance was 2,700. Cash. Okay, didn't we just do a question just as the previous page? Yeah, we did. No, it was this one. Hold on. It was this question here. Question 27. 24, sorry. That's interesting. It's practically the same question. All right. Let's do it. Okay, so this is P Shark creditors account, right? Oh, 34 answer. 34 answer is C. Sorry. Name of the YouTube channel is the same as this one here. Adapt to it. All right. Can you keep it tomorrow morning before the exam? Camilla, what are we talking about? As in more of these sessions tomorrow morning? Nah, sorry, tomorrow morning I kind of booked up already with some stuff with my wife. That's why I'm doing these sessions today. But these are going to stay up on YouTube, so you can always review them. And I have a couple of others from last week. All right. Okay. Right. So on June 1st, he owed the creditors $4,300. So again, a creditor is a liability, and liabilities have credit balances, right? So that's the balance at start. During the month, he paid $13,100 by check. So he paid them $13,100 by check. That goes on the debit side. At the end of the month, his balance owing was $2,700. So that's going to be carried down from the debit side. So you have $15,800. So what's missing is your credit purchases. Should be $11,500. What they're asking for is total purchases. And total purchases is cash purchases plus credit. And when you add those two things together, we get $15,000. Yeah, I am. That's correct. Ooh. Did I hear that beautiful crack? Right. Hey, look, Alan, Brown, and Cable Boy. Okay, and how much of the loss must be borne by Mr. Cable? Okay, so I remember this weekend, I made a mistake. I think I calculated Brown. Alan invested 20, Brown and Cable 5. The loss sustained during the year was 1,000. The partnership agreement is silent on the item of losses, although profits are to be split in the ratio 2 to 2 to 1 in favor of Allen, Brown, and Cable. Now, that's where they catch most people, right? The ratio is not just a profit sharing ratio, it's a profit and loss sharing ratio, right? There's no different ratio to share losses than to share profits, right? So what do we do when you see numbers in a ratio? We add them together. 2 plus 2 is 4 plus 1 is 5. And then we take the number and put it over the 5. And in this case, we multiply by the loss. That's going to give us 200. Okay, so that was 34 to 37. All right. Okay, Google Meet. 34. Yeah. Yeah, Google Meet. Let's give me a quick G. If you need me to re-explain, give me an R. Okay. All right, lovely. Thank you. Okay. Good. Anybody message on the phone? All right. So we're closing in on the end here, guys. We're almost 2/3 of the way through. Let's see what else we can do here. Which of the following ratios describes the liquidity position of a business as a asset test? Right? Net profit is profitability. Profitability is a category of ratios. It is not itself a ratio. And the inventory turnover is an activity ratio. All right. Next. 41. Rose contributed 7,000 in cash and a motor vehicle with 3,000 to a partnership. Her contribution to the partnership will be recorded in what journal entry? So cash and a motor vehicle are both assets. So when the partners put in, the assets are increasing. How do we record an increase in an asset? With a debit. All right. Now there's only one entry here that gives a debit to cash and to motor vehicle. And of course, the corresponding credit will go to capital because you have to credit where it's coming from. Yeah, so correct. C is correct. All right. Okay. 40. This is 39 here. Also, so hold on. Let's tackle 42. Actually, no. You know what? Yeah. Let's just do whatever's visible. Okay. So to the top left, sorry, we have items 39 and 40 refer to the following information provided by K, a sole trader. They for real here, boy? What is the credit sale? Okay, so you have to again do a control account here. So the real hyping up control accounts here. Whoa. Let's try that again. So your debtors control account is basically an assets account. What are your double entry rules for assets? Debit to increase and credit to decrease. So your sales ledger debit balance was 3,000. Returns in would go on the credit side, as would bad debts and discounts allowed. Checks received would also go on that side as well. Sorry. And your closing balance would go there as well. Okay, so 5 and 2 and 1 is 800. That's 11,800. And therefore the missing figure here would be the credit sales. On the man, leave yourself. Right, 8,800. Boom. Number 40, on 31st of May, was 37. Good. 37 was 200. What time? First batch finishing at 6, and then we're taking a half-hour break for a little dinner, and then 6:30 to 8:30. All right, on 31st May, it was discovered that a customer's check of 150 had been dishonored. What will K's updated sales ledger control account? Okay, so if the check was dishonored, what that means is that we didn't actually get any money. So we think that they owe us 8,800. Sorry, not 88, 4,000. There was 4,000. Right? All right, so this is the balance before the adjustment, and we have to add the 150. Because we thought the person paid us off, but because their check bounced or it was dishonored, we didn't actually get any money. So we have to put back the money in the account, which would increase the balance. Yeah, that's a new one too. All right, 42. On 2nd of March, 2023, L Land bought goods worth 630 on credit. He received a trade discount on this amount. Okay. We have some calculations. Okay, hold on. He received, right. The invoice also stated 2% in 20 days, net 30 days. How much would Land pay for the goods if he pays on the 8th of March? So the 8th of March is clearly way less than 30 days, or less than 20 days from the 2nd, right? It's less than a week, right? 20, this is almost 3 weeks. So first of all, the 630, you had a minus 3%. So 3% of that is 1890, right? So that's 611.10, right? And then we also have to take out 2%, right? The invoice says 2% in 20 days, and he's paying in 6 days. So now we're gonna take a 611.10 minus 2% of that, 50. Divide by 100, then multiply by 2. So 611, 1222. Yeah, I'm gonna guess that that's 598.88. That's D. Right? I'll recap that, right? So when L Land bought the goods, it was 630 and he received a trade discount. Trade discount is deducted at the point in time of sale, right? And it's not recorded. I'll also rewrite that a little more clearly, right? Oops, that point is way too big, right? Right. And then he paid, if he pays within 20 days, which he does, he gets an additional 2% discount on that figure. Right, so define 2% and then subtract it. Okay. Let's just double check it. Whoa. Oh, yeah. All right, cool. Okay, so Google Meet is, and then 43, in a partnership agreement, which of the following transactions is compulsory? Sharing of profits also. That's the only one in that list, right? None of the others have to happen. All right, so Google Meet, if you guys are good with this page, just kind of give me a quick G. If you need me to re-explain any of them, many of them, or all of them, give me an R and give me the numbers, right? And while I'm waiting there, in class, people, how are you feeling with that one there? Any questions, even with the 42 or the 39 and 40, we okay with those? All right. Right. So when the person pays us back, we as far as we can say, hey, we get a check, we get money, right? So what we would do is we would enter it on the credit side of the account, of the control account, and bring the balance down, right? But if the check was dishonored, did we actually get the money? No, which means now we gotta kind of put the debt back in, right? So whereas before we thought they owed us 4,000, and the check was dishonored, we gotta say, hey, hold on, we gotta put back that 150 in the account. So yeah, that's why 4150. Right. Lily, what do you mean by net 30 days? It means you have to pay. That is the deadline by which you have to pay. I'm not sure why the word net is applied there, to be honest. That was never explained to me, and I never found out. But net 30 days means that you have to pay the full amount by 30 days. Right. To which of the following, to which account should depreciation of office machines be transferred? Well, it should say the income statement, but it says the profit and loss. And it says office machines, eh? If it was factory equipment, I would tell you, hey, manufacturing. All right, 43. 43? Yeah, that's correct. 47, Montego calculates its allowance for doubtful debt at a rate of 2%. What will be the accounting entry for the recording of the in 2020? Okay, cool. So check this, right? It's 2% every year is the provision, right? Okay. 6,000 by 2% is 120. 5,000 by 2% is 100 and 140. Right? The change in the provision, right, is where we look. So in the first year, it was the full 120. In the second year, it went down by 20. From 120 to 100. Right, so check it. When you have a decrease in the provision, you have to debit the provision, or as they put here, allowance for doubtful debts, and you will credit your income statement. So, yeah, option A. All right. Next, what is the asset test for the period? Okay, so the asset test is current assets minus inventory divided by current liabilities. So cash, debtors, right? So we're going to ignore this. Can I do, sorry, what? Or the asset test, sure. So it's current assets minus the closing inventory, then divided by your current liabilities. Yeah, do you think? Right, so if you leave out the inventory, we only have two assets, right? So 8 and 3 will give us 11. And then, hey, how are you doing? Afternoon. I have a paper here. I'm going to staple this way, right? Sorry, you just hammer the stapler there. Yeah, so sorry, so 11,000 and current level. So you have to add these two. So in the divide, you get 5.5 to 1. All right. 47. Right. Okay. So in 47, we have a decrease in the provision of $20, right? It went down from 120 to 100. When the provision decreases, the double entry is debit the provision account, or as they call it, the allowance account. Right? And credit the income statement, or as they have it here, the profit and loss. Right? So that's just the double entry you have to know. Right? Or Lexi was asking for 47 too. Huh? Oh. Oh, and here now they're asking for the current ratio. Okay. So the current ratio is all total current assets. All right. So if we add in the 1,000 this time, we'll actually have 12. Current liabilities don't change. Right? All right, one sec. And 12 divided by 2 is 6. Okay, so TT, I hope I explained 47 to your content. 47. 47, I know inventory. 45, I did. As in, like, I excluded from the transaction. So 8 and 3 is 11. Right? So if I did 8 plus 3 plus 1, I get 12, and then 12 minus 1 is 11. You could just not add it in. Right? Miriam. Right. So Miriam, that's just the formula. So the asset test is, as they say, it's a more stringent test of liquidity. Basically, it gives like a worst case scenario. If you can't sell any of your inventory, are you still able to pay off your current liabilities with your existing current assets? Right. So that's why we exclude inventory. And 48, a debt is considered to be bad, a bad debt, sorry, if the receivable fails to pay. Okay. All right, so we're closing on the last 10 here. Dairy Jet? What? Oh, this takes ages. Oh. Well, I hope you'll get food fast because being hungry, yeah. So how I get the 12,000? Oh, right. So the 12,000 till here was the sum of all the current assets, right? So in this case, I didn't have to exclude the inventory. So I had these 3 items here, right? 8 on 3 account. All right. Okay, in class, people, are we okay with this page? Any questions, anybody, anything? No, I was asking if you're okay with this page. All right. Okay, yeah. And Google me, just give me a quick G if you're good with this page, right? Who, you? Right, of course, ours if you need me to re-explain. All right, guys. All right, so 49 and 50 refer to the T account, the bank account there on the top left-hand side, sorry, left-hand side. Bank account, so 5,600. Yeah, go through the question. Talk to me. We'll go back to the previous page. You're Jordan, talking to you, eh? When you're ready, I'll work this stuff. I'm gonna check it. I'll answer the question, right? All right. So you start off with 5,006. You bring in 11,000 more. So that's 16,600 you have in total. Here, that's 17,400. So you spend more money than you have. All right, hold on. In the records of the bank, the opening balance represents a liability. So you gotta be careful, there. The bank, our money at the bank, right? Our money at the bank does not belong to the bank. It's a liability from the bank's perspective. What is the balance carried down at the end? Right, so we spent 17,400 and we only had 16,600. So that's 800 and it'll be brought down on the credit side. There's a credit balance of 800. It's an overdraft. Right. 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 Okay, let me tell you the question here. Right. Right. Okay. So what I was saying, let me just do it quick, right? Yeah. 50? Yeah. Right there. See? When you add up the hold on, huh? Yeah. You add up the total on the debit side, that's your inflows, right? Money coming in. So 5,006 plus that is 16,600. When you add up your outflows, you get 17,400. So the net difference there is at 800, but it would be a -8 because you have more going on in. In terms of double entry and T accounts, how that would be, it would be a credit balance in the bank account because it would be an overdraft. All right? Okay. Right, okay. Oops, sorry. Right, so inventory is an asset, cash is an asset, debtors. If we add up all three, we get 12. And if you subtract the inventory again, you get back to 11. So, right, so what I did is I simply just didn't add the inventory. All right, so it'd be 11, not 10, right? Make sense? All right, cool. No problems. Yeah, sorry. I take some shortcuts sometimes. The balance carried down will be debit, but when we talk about the balance on an account, we're talking about the balance brought down. Yeah, it'll be carried down from this side, but brought down on this side here. And that's what we're talking about. All right. 52. So when the top right hand side here, guys, for the current ratio, I did Mario. If you go back here, right? Remember this here, this was the asset test ratio. 46 was the current ratio. All right. Okay. What is the cost of production for Jesse manufactured? Okay, so the cost of production, cost of goods manufactured, prime costs plus that, plus this minus that. These would be irrelevant. So sorry. Minuses. All right. Oh, hold on. Just now, Lexi, you have a good point there. Just a second. Hold on. Lexi is saying something here. What is the balance carried down at the end of the period? Ooh, okay. No, you're correct. All right. I had a, sorry, my apologies, and thank you. Well, everybody who was, because a few of you all say, sorry. Yeah, guys, so let me read that. Okay, Mandeep, yes. No, you're correct, Mandeep, yeah. Yeah, guys, sorry about that. Yeah, so you see why it's important to read the question. I just see what's the balance, right? At the end, okay, IMC CD. Right, okay, thank you. And my apologies. All right, so we're going back across here now. Right, prime costs. Right, so we add in the factory overheads. That's 20 and 15 is 35. 35 plus 5 is 40. 40 minus 3 is 37. All right. Okay, so everybody cool now with number 50? All right. All right, cool. Right. If revenue expenditure is overstated, which of the following items will be affected? Profit. Revenue expenditure is basically all those expense items you see in the income statement, right? Insurance, rent, salaries, wages, advertising, blah, 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 right? If that is overstated, it means what? What's overstated mean? It's too high. If it's too high, that means that you would your net profit would be wrong. It would be too low, right? It wouldn't affect sales or inventory or working capital. Okay. 54. The total of the returns outward journal is transferred to the credit side of returns outwards account. Right? That's just a double entry knowledge at play. Right. Based on the information above, the working capital amount. So working capital is current assets minus current liabilities. Whoop, careful. Right. So you have current assets, receivables, inventory, right? Current liability. All right, so when you add up, when you add up these three, you get 12,000. Right, 5,005. What was that, sorry? Yeah. No problem. Right. Sorry, why the credit side returns outwards? Right. So all right, so Adana. So that's a good question, Adana. Thanks for asking that. So let me see if I can explain it so that it makes sense, right? Aisha, yeah, May 2024. Right. Okay. So returns outwards is also called purchases returns. And that's when you buy something and then you return it, right? Now purchases, sorry, my handwriting not so good. Purchases is an expense. And expenses are debited when we incur them, right? Now, if you return goods, right, what happens is you're kind of unpurchasing them. So what's going to happen when you have a purchase return, right? The expense has to, your expense has to go down. You have a decrease in the expense, right? And the decrease in expense, you have to do the opposite of what you would do to record it. And the opposite of a debit is a credit. All right, Adana, so I hope that helps. All right, cool. Okay, in class, people, are we okay with this page? Any questions, anybody, anything? We good? All right, cool. All right, Google Meet, in the drill. Give me a quick G in the chat if you're good with that, please and thanks. Yeah, Dana, no problem. All right. All right, so in the last 5 or 6 questions here. Right, 55 refers to the following information for KD Limited. Sorry, one sec. Right. Opening capital, drawings. Okay, so the closing capital is opening capital plus net profit, or in this case, minus net loss, and then minus drawings as well. So 500 and 1,500 is 2,000. 3,000 minus 2,000 is 1,000. 51. Sorry. 6,005. All right. 58. An asset purchased for $1,000 depreciates at a rate of 10% per annum using the reducing balance method. What is the book value of the asset at the beginning of the third year? Right. So under the reducing balance method, the rate, the percentage, 52. All right. Yeah, so Amari, so it's prime cost plus factory overheads plus opening work in progress minus closing. The finished goods, that's only for the income statement, right? They wanted the cost of production. All right, so 20 plus 15 is 35, 35 plus 5 is 40, and then 40 minus 3 is 37. All right, so Amari, hope that helps. Right, so in year one, we start off with 1,000, and then we lose in 10%, right? 10% of 1,000 is 100. 1,000 minus 100 is 900. We lose the next 10%. So the rate at which it loses value or depreciates is constant, right? The dollar amount will differ. And 900 minus that will give us 810. And that's the value the start of year 3, and that is the answer to the question. Lexi, very good. All right, so, scroll down. 810. All right, 59. The following information relates to a privately managed charity. You have an opening balance, operating expense, receipts. What is the closing balance? Right, so the opening balance is a positive figure. The expenses are a negative. The receipts are all inflows. Right, so if you add up the inflows, you get 9,000. You minus your one outflow of 1,000, you get a net flow of 8 and 30, and 3 plus 8 is 11. Right. Items 56 and 57 refer. Sorry, who's that? Okay. Right. A youth group, right? Right. So closing bank balance, donations received, fees collected, receipts from essay competition, purchases of prize for essay. So you want to find the opening balance. What is the total capital expenditure? All right. So capital expenditure is any expenditure to acquire or significantly improve the value of non-current assets. The only item there that has that is this one here. So 57 is that. So to find the opening balance, this is interesting. Right, so receipts and payments, right? Okay, so we don't know if it's a debit or credit at start. Right, sure. You never saw receipt balance. Oh, well, hopefully you're able to follow it. All right, so donations as an inflow, that goes on the debit side. Fees collected, that also goes on the debit side. Receipts from essay competition, that's also an inflow. Purchase of prize for essay competition, also 2,000. So that kind of nets off there quite nicely. And then the purchase of photocopies is 6,000. And the closing balance is 10,000. This side gives us 18,000. 11 and 4 is 15. Right, so yeah, the opening balance would be on the debit side. 18 minus the 15.6 is 2,400. prizes included in what? Right. So prizes is not a non-current asset, right? The answer for 57, right, is 6,000 because capital expenditure is expenditure to acquire new non-current assets or to significantly improve the value thereof, right? So prizes for ST competition, that's you're not buying that to hold, you're buying it to give away. That's an expense, right? That's not capital expenditure. Sorry, 2,100. 810. Shiba, what were we talking about? I forget the 810 already, yes? All right, there you go. Okay. All right. Beautifully made. Thanks for the rose. All right, guys. We have in class people, we okay with the questions here? Yeah. All right. Google Meet, just give me a quick Genie chat, please, and thanks. All right. Yeah, so here's what, guys. After we finish this paper, I'll take an early break for dinner. I'll have dinner and we'll try and start back at 6. Right? I already have the Jan 2024 done, but I think I'll do the Jan 2025. If we have time, we'll backtrack 2024, right? When we finish this, I'll take an early break for dinner. Right? So we'll start back at 6. Right? So I have the Jan 2024 printed, but I want to do Jan 2025. So I'll print that one. We'll do that one. If we have time, we'll do Jan 2024. All right. 8:30. I said 8:30. So I mean, if you finish before, cool. If you all want to finish before, I would like to do 2, but I don't want to overdo it. But I mean, we did 2 Saturday, didn't we? Yeah. So.
We did one like verbally.
Yeah, we just trying to zoom through it. All right, cool. Sorry, Lexi. How they expect us to do all these work? Lexi, that's a good question. No, I don't understand how they can multiple this question with working. And if you think this is ridiculous, you should see the add maths multiple choice. Add maths and multiple choice shouldn't go in the same sentence together at all. But Lexi, you pardon my French, you're bloody right. You're damn right. Right? Especially if it's e-testing and they're giving no people to work it out. Okay, inventory was purchased from M. Smith on credit, but posted. Okay, this is so how do we correct this? All right. So if you purchase on credit from someone, you will debit purchases and credit them. So we credited N. Smith, or we were supposed to credit M instead. So how do we fix this? Well, to undo our credit, what we had to do? We had a debit. So you'll debit N, and then we missing a credit from M. How do you fix that? You credit M. So the answer here is just D. Debit N. Smith to remove the incorrect credit that shouldn't be there, and then credit M. Smith to put the credit where we're supposed to put in the first place. So the Prepsi said, yeah, it's ridiculous. You know, if they wanted to do working, then give all the people if working is marks. You understand? Why you all throwing away people's efforts like that? I don't understand. I don't agree. Okay, all right, folks. Yeah. So here we'll do. I'll take a short break now to have an early dinner. I'll come back down and try to start at 6. Right. So we will start with the Jan 2025, and if we have time, we'll backtrack and do Jan 2024. All right. So yeah, I'm gonna close off Google Meet. Right. I'll see you all back in about 20 minutes. Right. YouTube, same thing. I kill any live on YouTube, but again in about